Hey everybody, hope this finds you doing well. Today we're doing a little bit of a different video. We're going to go more into dollar versus Bitcoin and how there is a drastic shift in the purchasing power when it comes to the US dollar and when it comes to the Bitcoin. The differences are stark, and we're going to go over some of those differences, and hopefully over time, as you continue to learn and do some of your own research, especially if you're interested in potentially investing in Bitcoin, you will come to understand why Bitcoin has become the phenomenon that it is and has the possibility to continue to grow for a variety of reasons. But one of the main reasons has to do with the fact that it is not going to be inflated like the US dollar. It is not controlled by any centralized authority. It's secure, but also it is increasing in purchasing power over time, as opposed to a fiat currency like the US dollar, which is decreasing in purchasing power. As you can see here on this image from Visual Capitalist, you can see here from 1913 all the way down to around 2025, you can see what $1 used to buy. So you used to be able to buy 30 Hershey's chocolate bars in 1913. In 1953, you could buy 10 bags of pretzels. In 1987, you could buy 2 boxes of crayons. In 2008, 2 lemons. 2020, you could buy 1 McDonald's coffee. And now in 2025, you can buy 1 value pack of gummy worms. And actually, I would contend nowadays that it's actually much more than $1 to buy any package of gummy worms, me being a candy lover myself. But anyway, as you can see, just generally speaking from this graph, you can see that after several major occurrences in United States history, this continued to snowball as inflation and the printing of currency continued over time. You can see in 1941, in World War II era, this is one of the most inflationary decades due to wartime production and massive bond buying by the Federal Reserve. Then in 1971, this was a biggie when Robert Nixon, the president at the time, took the US dollar off of the gold standard because US dollars used to be backed by gold. And now, because of the fact that there was so much currency that was being printed and needed to be printed, it was a disconnect. And so he took the US off the gold standard. And you can see from there, the purchasing power continued to go on a steep decline from there. Some of the key takeaways: the purchasing power of the US dollar has fallen over time due to inflation. The U.S. abandoned the gold standard, as we mentioned, ending dollar convertibility to gold. And then Western powers developed the Bretton Woods Agreement after World War II, which saw all national currencies valued in relation to the U.S. dollar. So that's basically the U.S. dollar now being the global reserve currency. So you can see here that the purchasing power of the consumer dollar with regards to the U.S. city average has continued to decline. And this is just from 2003. From 55 all the way down to 30 in September of 2025. And we can get a better view from this image. This is from the data from the U.S. Bureau of Labor and Statistics in the United States. You can see that the consumer price index from the early 1900s all the way now to 2025, 2026, that over time you can see that this drastic decrease in purchasing power when it comes to the US dollar and this particular fiat currency. And it really has to do with the currency that is out is not keeping up with the economic growth or lack thereof. And also the more printing, obviously, of money, that's going to also cause inflation. And when we talk about the stock market, when we talk about some of these other markets, at the end of the day, we see that businesses, in order to continue to keep investors, you have to continue to raise prices over time. We know that rents continue to go up, not only for us as residents, but for businesses as well, like restaurants. Unfortunately, they're one of the businesses that don't last very long because part of the reason is the amount of rent that they have to pay in some of these nicer buildings. And so that is a cost. The rising cost of food, the rising cost of paying their workers with wages. And so it's a number of things, obviously, but over time everything is going to continue to get more and more expensive when you price it in the US dollar. When we look at, and we showed this last week in our video, but we didn't look at the 10-year chart. And you can look just on average, the inflation rate is going to be at least anywhere between 2 and 4%. Obviously, you have some outliers in 2020 during the pandemic. Nobody was doing anything, so nobody was spending anything. So the prices were not going up or down. And then you had a drastic increase in inflation in 2022, and that's when the Federal Reserve stepped in and started hiking interest rates, and that affected all global markets around the world. But we see here, even with the Federal Reserve coming out and saying that they want to keep the inflation rate with a 2 in front of it, and Kevin Warsh reiterated that in his first press conference as the new Federal Reserve chair, still over time, that is going to take away from the purchasing power. So even if you just look at here, the inflation at 2%, which is the stated goal of the Federal Reserve, you're only retaining 82% of that dollar after 10 years. After 20 years, you're only retaining 67% of that dollar. So basically that dollar is now 67 cents. Then after 30 years, it's 55 cents. And this is if you just stay with the 2% inflation. And as we see here, we know that it continues to go up over time. And even if you stayed static, it's going to be 2 to 3% over an average time frame. So we know that it's getting harder and harder to buy certain goods with the US dollar. If you are trying to buy things with the US dollar, you're going to need to accumulate more than what the inflation rate is. That's why we think investing is one of the best ways to try to combat inflation. And we think Bitcoin is one of the better ways to combat inflation when you look at the purchasing power over time that Bitcoin has been able to increase. So you can see here, for example, it took 664 Bitcoin in 2016 to buy the median priced home. In 2020, it went down exponentially to 45 Bitcoin. And now, and from 2024 to 2026, the median price home is less than 6 or around 6 Bitcoin. So 6 to 8 Bitcoin now in 2026. So you're seeing that it's going to take less and less Bitcoin to pay for certain things. So likely in the next 10 years, if we continue at this rate, it may only cost 1 Bitcoin or less than 1 Bitcoin to buy a median priced home. So that's why people look at Bitcoin as a store of value. And if you want to learn and understand a little bit more about Bitcoin and why it was created, this is the original white paper. It's called Bitcoin, a peer-to-peer electronic cash system. And it goes into exactly what Bitcoin is and the reason why it was even invented by Satoshi Nakamoto had to do with the financial crisis in 2008, when there was a lot of greed that was happening in the financial markets, and the U.S. citizens ended up having to pay and front for the greediness of a lot of these institutions when they did those mortgage-backed securities. And so a lot of these major banks and institutions, many of them were bailed out by the taxpayer. And so this was something that created the drive to create something like Bitcoin, which is a algorithmic network that is secure, fully decentralized, not controlled by any government, not controlled by any central bank, cannot be inflated. There's only going to be 21 million. We know the exact schedule when Bitcoin has its halving, which is usually approximately every 4 years, until it gets to a point that 21 million has a mind. Once that has happened, there will be no more in existence. It's all mathematics. It's all according to a code. And so that's one of the reasons why there are Bitcoiners who strongly persist on buying Bitcoin and holding Bitcoin as opposed to holding on to US dollars. So we definitely think you should take the time to do more research and learn a little bit more about your fiat currency, whether it be the US dollar or the euro or whatever current country you come from, and learn a little bit more about your currency and how it is affecting you and your purchasing power. Because at the end of the day, it's not about how much fiat currency you have. It's not about how much dollars you have. It has to do with what can you purchase and what can you do with that dollar. We use that as a utility. Same thing with Bitcoin. We use it as a utility. What can we do with it? And that's why we're seeing now the first trillionaire, many more billionaires, is because there's more dollars. That's why. So once again, we really appreciate you always checking us out here on YouTube every week. Of course, we're on Instagram as well as X. We hope you are intrigued and maybe do a little bit more of your own deep dive, there's lots of information out there when it comes to what your dollars are worth and what they will be worth in the future. Take care. We look forward to linking up with you soon on the Network Chain. Bye-bye.